Hello, my name is Danny Prestige. I'm a certified financial planner here at Wood Financial Group. I'm here today with our January 2017 monthly market update. Now today we're going to discuss some of the major headlines that influenced the markets during December of 2016. We're going to also provide a little insight into what these developments can mean for you as an investor. Now in the final trading days of 2016, the market rally we saw following the presidential election calmed down a little bit, and all three major indexes posted losses for the week of December 26th. Despite this ending dip, the S&P 500, the Dow, and the NASDAQ were each up over 2% in December, and they posted solid gains for the year. The S&P 500 added 9.5%, the Dow Jones was up just over 13%, and NASDAQ increased around 7.5% during 2016. Now, arguably, the biggest economic event we experienced last month was the Federal Reserve's much anticipated interest rate increase. On December 14th, the Fed raised the benchmark rates by 0.25%. This was only the second time they increased rates since 2006. Now, the Fed chairwoman, Janet Yellen, explained that her group's decision reflected the economy's progress and their expectations for continued economic development. The Fed also indicated that they might introduce 3 additional interest rate increases during 2017. That's an increase from their previous prediction of 2 during the year of 2017. Now, unlike the market volatility after the Fed's last interest rate increase in December of 2015, investors had a much more measured reaction this year. The VIX, a main volatility measure, increased somewhat in December, but ended 2016 over 30% lower than where it began the year last January. Now ultimately, rising interest rates are a sign that the economy is growing. Last month we saw several indications of growth, primarily the report on third quarter gross domestic product. In the Commerce Department's analysis, they adjusted the GDP up to 3.5% annual rate. Now that's showing the fastest economic growth we've seen in 2 years. So GDP wasn't the only economic measure that beat expectations in December. Measures of consumer sentiment and consumer confidence both reached levels not seen in many years. Now, in addition to these positive signs, we saw the dollar at a 14-year high in December. We also saw crude oil continue to recover as investors anticipate that OPEC and other producers will reduce their output during 2017. But of course, positive economic indicators don't mean that everything is perfect in the economy. Data released in December did show decreases in durable good orders, industrial production, and housing starts. So we don't like to see these declines, but the biggest economic question marks may not come from existing data. Instead, they may come from the changes in our political leadership. Stocks have rallied on the hopes that President-elect Trump is going to reduce regulations and taxes while increasing infrastructure investments. But nobody knows for sure what changes could be on the horizon or how Trump's policies will actually affect trade. Now, as we begin 2017, we're going to closely watch economic data and the political environment. We're also not going to turn our attention towards upcoming fourth quarter and end of year results. We're going to learn more about how the economy performed in the final weeks of the year while we continue to closely monitor what lies ahead. Now, I'm looking forward to next month's video update where we're going to have annual data from 2016 to discuss. Now, additionally, I want to bring to your attention the State of the Markets address. Every year, we do several presentations where we dig in much more detail about what's going on in the economy, what happened in 2016, and what we anticipate taking place in 2017. So if you've not already signed up, feel free to give us a call at the office, 615-826-5749, and make sure that you come out to that State of the Market address. Feel free to bring friends or family. We spend a lot of time going over a lot of the details, and it should be an extremely informative session. So that's it for this monthly market update from Wood Financial Group. Again, my name is Danny Prestige, and thank you for your attention.